Thank you everyone for coming today. My name's Justine. I'm the Chief Executive of Te Puna Umanga or Venture Taranaki. Fantastic, exciting opportunity that we've got to here today talk with regards to Kiwifruit, which is one of the ventures that we're looking at as part of our branching out project. So we've got a great panel of speakers. They're going to take you right through the value chain, everything from growing through to the market side. So we're very happy to have all of our speakers here today, and thank you very much to all of you who have travelled from near and far to come and listen today and partake in this event. Thanks, Kev. So I've got a few slides to just introduce what we're doing here and what this project is part of, and then Kev, our project manager, will take over and take things forward from there. So firstly, what is this branching out project about? It's an initiative that we launched earlier this year after working through with Ministry for Primary Industries and our local councils who have put some funding in together to run this project. And this is about progressing actions that sit in our regional strategy around strengthening and diversifying our Taranaki economy and value chains by identifying innovative, commercially viable opportunities for our food and fibre sector in our region. The concept of branching out is driven by that name. This is not about there's some slogans around, moving away from dairy or things like that. It's not about that. It is about truly diversifying our food and fibre sector, building on those really traditional strengths that we have in dairy, meat, poultry, and also actually some quite long-standing horticulture enterprises in Taranaki that perhaps just aren't that well known about. And we also have obviously a lot of value add already occurring in Taranaki in the food and fibre sector, but we'd love to increase that and we'd love to add more diversity to the products that we are producing. So in terms of why we're doing this, we have really what we think are some untapped strengths. So we know how to do things at scale, we know how to do them really successfully. We have an amazing temperate climate with great soil, really good water availability, and we also have landowners and other participants in the value chain who are seeking new and interesting land uses or ways to diversify their portfolio of investments or products that they might be producing. It's part of our region's economic development strategy that was released in 2017, Tapuairoa, which had food futures as one of the platforms in that strategy. And that was really focused on this accelerating higher value, value-added products within the region. And had 4 elements to it: creating a Taranaki food network, undertaking supporting some further value-added pieces called the major new ventures, telling our Taranaki story and accelerating future farms. And so this branching out project actually supports all of those 4 things, and we've had previous projects as well that have pushed these things forward. It's also highly relevant to our Taranaki 2050 roadmap, which is the vision that our region has created for what we want our region to be like in a low emissions future in 2050. So that's an intergenerational shift, and one of the things that was again identified, so obviously not inconsistent at all with Tapuairoa, given we're talking about the same region, was about having diversified, value-added, strengthened value chains within Taranaki and supporting New Zealand's overall food and fibre sector, therefore, as well. And if you haven't seen or heard of this roadmap, then please do check it out. You can just Google Taranaki 2050 and you'll get the roadmap, and then you can pick into that picture and look at the different elements in terms of what's sitting in there for that vision that our people want for our region. And so what I'm going to do now is hand over to Kevin O'Reilly, who's going to talk to us about specifically what the Branching Out project is looking at doing.
All right, thank you, Justine. Great to see everyone here. When I started thinking about this event, I thought I'd be happy with 20 people, but we've got plenty more than that, so it's great for everyone to see everyone else in the room who's interested in this land diversification bits and pieces. Justine mentioned we're going to be aiming to create 10 to 12 blueprints, and these venture blueprints have a bit of a life cycle to go through. So first we need to investigate what we can do in the region, identify some high value options for people to pursue, expand on those propositions with the help from our scientists and our CRIs. Then we need to validate with the landowners that there's an appetite to undertake these kinds of initiatives. So this Kiwifruit one is in this stage here. the validate, and I think we're at the point where we can share the idea as a viable future if there's people who want to pursue it. We'll then pilot some initiatives and end up publishing these venture blueprints so that they can be shared with the region so people can pick them up, consider them, and then work to invest in them. This project is delivered by Venture Taranaki, but it's not on its own. We've got great help from the MPI, and we've also got the 3 councils who are chipping in some cash to make sure that we get this as a fully regional experience and a fully regional initiative. We've also got quite a unique setup of support from the CRIs, where all of our CRIs are working together. We can fire them off a question and say, what do we know about, I don't know, Angelica root? They can come back and feed in and help us, build the best possible ideas. And importantly, we're also surrounded by local industry as well for the project. So it's not just Venture Taranaki Kev, making his way. We've got some captains of industry here who are helping us, shape and progress these ideas. A couple of quick things I'd like to draw your attention to. We've got a report coming out about our land and climate. It's completed by Plant and Food Research to help us understand what we can grow in the region, what's going to thrive in this climate, and make sure that we don't, go down the wrong path. We've got a public webinar launch for it next week, and we'll be sending details out about that. We're also doing some work on value chains and really understanding where the region can profit from these new initiatives to make sure that we're, making jobs and making people money. I think that's super important if we're going to go into anything for the long term. And the final thing is we've got a land diversification register. So we've got a bunch of landowners who have jumped online and said, I've got a farm this big, and I've got this amount of land that could be contributed to an initiative like growing kiwifruit or something if the opportunity came up. The idea of this is to kind of cluster this group of people together to say, yeah, we have got real land, we've got real opportunity, and by bringing together everybody who's in the same boat, we might have scales of economies to do some really great stuff. But on to today. We've got kiwifruit, we've got a great panel of speakers, we've got plenty of time for questions, so as you think of them, put your hand up and let's get them asked and answered. The question that I'd like everyone to consider at the end of the day is, do we think kiwifruit can thrive in Taranaki? It's a personal question, and it's only going to thrive if a group of people decide, yes, it will thrive for them, but we've got the support services and everybody around to show you that it might be able to happen. And are the realities that stopped us in the past still relevant today? So I want to bust some myths as well. Who's in the room? About 35% of you are landowners, 35% are investors, and 35% are the value chain service support providers. So kind of the whole experience required in the region are here today to kind of listen in, get involved. Slides and notes will be circulated after the session via email, so you don't have to worry about taking notes, just listen, think up good questions. And on the way out, we're just going to ask you one question. Do you want to stay interested in hearing more about this opportunity, or is this no longer for you? Okay? But without any further ado, I'd like to welcome Sue and Tom from Zespri, and they will tell us a bit about the global supply chain and their role in the market.
Wow, what an awesome turnout, and thanks to Venture Taranaki for having us here today. In the kiwifruit industry, if it's a rainy day like this, we get big turnouts, so it's pretty similar for down here. I'd like to also recognise, I know that there's a lot of past and present kiwifruit growers in the room, so I'd like to recognise those growers first. Firstly, I thought we'd paint a bit of a picture and go back a little bit in time. Obviously, people have a bit of a stop-go on the kiwifruit industry because of what happened in the 1980s. So in the 1980s, obviously, the prices were dropping, there was financial crisis. You guys down here had Cyclone Bowler, which took out a lot of orchards as well. Well, what came out of that is that growers realised they wanted a single desk. We were too small in the fruit basket, we were 1% of the fruit bowl, that we actually wanted a single desk that actually sold our kiwifruit into the markets. So in 1989, growers got together, they went to the government, they told the government that they wanted a single desk. The government turned around to them and said, if you get 90% support, or if you get support from the growers, then we will put it together. And so they had a vote, and 90% of the current growers voted to have a single desk. So then became the Kiwifruit Marketing Board. Over time, that changed into Zespri, which is what we have now, a world-renowned brand that's #1 in the kiwifruit bowl. So Zespri, we don't own any orchards. Zespri is just the marketer. We're there to market the fruit. The post-harvest, the pack house are there to pack the fruit, and the growers obviously to grow the fruit. So Zespri is there to merge the three together. We also have an avenue. So if there are people that want to sell kiwifruit outside of Australia, there's an avenue called Kiwifruit New Zealand, which is the regulator that looks after anyone that wants to sell into a market that Zespri's not currently in. So ultimately, anyone that wants to sell kiwifruit outside of Australia and the islands has to come through Zespri. Make sure that's turning. So I just want to take you through a few of the stats that we've got. Obviously, we've got Zespri in the middle. Zespri has relationships both with post-harvest and with growers. We're very linked together with regards to when the kiwifruit comes into New Zealand. We had sales last year of 3.3 billion, and Tom, my colleague, will take you through the marketing side of it. In New Zealand, we currently have 3,200 orchards that are owned by 2,800 producers. We're also, we have alignment, so 85% of our current ownership in Zespri is by current kiwifruit growers. We've changed our regulations in the past few years that anyone exiting the industry will now have to sell their shares after 3 years. So growers, we want growers to be able to own our industry. So the average orchard in New Zealand is around about 3.3 hectares. That is for green and pretty much the same for gold as well. At Zespri, we kind of think that a profitable green orchard is anything of 4 hectares and above. Anything below that, you start getting into a bit of, the costs aren't going to outweigh how much money you can make off it. We employ 578 people within Zespri. We have offices all around the world. So as you can see, most of our orchards sit in the Bay of Plenty. 80% of our fruit is grown in the Bay of Plenty, which stretches from the Coromandel down to Te Kaha. We've got 73 hectares in total, that is in Wanganui, probably the closest region to here. And then I just thought I'd paint a bit of picture on what growers grow, how many trays. So in Zespri, we talk a lot about trays per hectare. And just to give you a bit of an idea, one tray is 3.6 kilo box of kiwifruit. So that just gives you an idea when I start talking about trays per hectare. So within our regions, on average, for gold, most growers grow between 12 to 14,000 trays per hectare. And I'll leave my lovely accountants from Apata to tell us how much tonne that's going to be. I know a lot of people work on kilos and tonnes. For green, the average over the years has been around about that 8 to 10, and it's slightly come up in the last little while, but we've gone through a bit of a drought in the last couple of years, so the yield has come back a bit. So I just wanted to give you a bit of a background on orchard gate returns. So this is what we work on the average money that goes back to growers. So over the years, we have grown a lot. We've opened up and developed new markets at Zespri. So the orchard gate return, which is the bundle of money that ends up back at the growers. And then what comes off that is your on-orchard costs. So on-orchard costs for green are around about $30,000 to $40,000. So you subtract your $30,000 to $40,000 off your 67. So every grower in New Zealand gets paid around about the same amount of money with incentives on each side. So a grower supplies fruit early, we pay them an incentive. And that's really there is a compensation model for size and taste because you're taking it off the vine early. On the opposite end, we have long storing. So if your fruit stores really well, then we give you an incentive to store your fruit as well because you're going to get a lot of fruit loss if it's stored out into October, November. And then on top of that, the major thing that growers need to work for is taste. 60 to 70% of a grower's income is based on taste alone. So we, at Zespri, we get a lot of signals from the markets to say the taste is what is number one. So what we did over the years is we've built a model into our payment structure that the growers, if you produce us better tasting fruit, you get paid more money. So green at the moment is sitting at 67. Over the years, it's come quite a way from 32. Gold is another story. So gold is sitting at 161 with on-orchard cost anything between 35 and 50 because the on-orchard costs for gold are slightly more than green. Now with gold, it's a little bit different to green. So Zespri owns the plant variety rights for gold. And licences, you have to buy a licence off Zespri. So the good thing about having PVR varieties in the market is that you can let as much go to the market to keep the price up. So we want to keep the price to getting quite high, so we release enough licence to keep the markets going. And then finally, we've got organics. So organics is a major push from Zespri at the moment. We have got customers that are actually crying out for organic fruit. So we are trying to promote a lot more organics by releasing specifically gold organic hectares as well. So growers can only grow it organically. So there's always risks to the plan. So as you may have seen in the news, in 2010 we had a vine disease called PSA come through our industry, which took out our old version of gold, which was 16A, and we were just very lucky that we had another gold in the program to take over from it. You've got other risks like climate change. You keep hearing that, Te Puke is going to be the next kiri, so the temperature's going up. We've got labour issues, especially at the moment with COVID. Biosecurity incursions, we've got water issues. A lot of growers are going into new regions, but they haven't sorted out where their water's coming from. We've got, markets, we've got China that could turn off at any time. So there's always risks and rewards to everything, but Zespri's kind of there to kind of smooth the whole lot out to make it a bit more palatable for a grower to actually get more even returns without any humps and hollows. So what I'm going to do is just pass over to my colleague, Tom.
So as Sue said, there are risks to this plan, but kiwifruit industry is looking pretty rosy at the moment, and there's huge scope for growth around the country, but also in our markets. And it is a wide industry. There's a lot of things going on, so we're more than happy to come back and talk to grower or farmers in more depth or field phone calls as well. So, So there's two objectives for Zespri. One is selling the trays, but also building our brand. So our goal is to provide the world's best kiwifruit to the market, and we are the world's best growers of kiwifruit, so we need to deliver that product as it is. And that is done through quality and our taste program, as Sue said. So taste is so important for us. So there are competitive varieties out there in the world, in the southern hemisphere that comes from Chile, and they provide a lot of Hayward kiwifruit. So our selling point against them and us demanding a premium is based on our size and our taste. Secondly is building a brand. So Zespri is a big brand in the market, particularly in Asia. We're well known as a fruit label, and we're growing that brand throughout America, but also Europe. So these are our top markets for 2020, and they're predominantly around Asia. So China is a big market for us, but also Europe and Japan. So those are the big three. And we're looking to expand further from there. So you'll see down the bottom there is United States. We're looking to develop that market further so we can provide more volume as our plantings grow here in New Zealand. So a lot of value for our trays come out of China, particularly for gold. A lot of value for green comes out of Europe. So we've got a pretty lofty goal here at Zespri to expand our revenue. So at the moment, as Sue said, we're about 3.3 billion. We want to get up to about 4.5 billion in sales by 2025. So we're going through a state of rapid expansion, particularly around the Bay, but we've also seen some regional expansion around Kiri up north and also in Gisborne. So what this 4.5 is built on is gold and green, and we're expanding up to 200 million trays. And going forward, further to 2029, looking at about 300 million trays there. So what we're looking at is gold at the moment is taking over from green. So this is the first time that we've seen that gold has eclipsed Hayward production, and that's a big milestone for our industry. So you'll see green coming back slightly as in this plan, and that is taking into account loss of green hectares due to town expansion, a loss of hectares up north because it's getting a bit warm, but also loss due to cut over to gold. So people are seeing this and saying, hey, potentially there's some scope for green prices to come up with that volume coming down as well. So we're looking at that. You'll see in this slide actually also there's Northern Hemisphere volumes in this picture, and that is part of our 12-month supply window. So we do have plantings over in Japan, Italy, we're looking at Greece, but also we've got a bit in America as well. So that is a big part of our plan, because there's 3 to 4 months of shelf space there that we can't get into. So the 12-month supply window is keeping our brand on the market, keeping our presence there so we don't have to pay to get back in there. So we're a global brand. We're quite big in Asia, as I said. So we've got offices around the world. Shanghai is a big office. Singapore's our marketing excellence office, but also we've got offices in Italy as well. So we've got production in 5 countries: Japan, Korea, Italy, and I said pushing into Greece and America as well. So talking about the strategy a bit more. So this strategy comes back to growers and shareholders in New Zealand. So that's where the value lies. The shareholders get the revenue from the ZGS business, but the growers get the benefit from having us on the shelf space 12 months a year and continuing to keep our quality there. So we grow gold in the market over in Italy, predominantly about 3,000 hectares, but then we also procure green volume in Italy. So a bit of a mix there. Part of building our brand is around innovation, and we are in a privileged position because we are a single desk. We have the provision to put money into marketing spend, about 170 million a year, but also into innovation. So we put about 30 million a year into innovation. And that is across production efficiencies, looking at packaging, but also our new cultivar program, which is key to our success. So our new cultivar program gave rise to Gold 3, and it's a pretty exceptional fruit. It's going to be hard to beat in the future to bring out another gold because it is near perfect in a way. So our breeding program, we focus on the 3. So looking at the orchard, supply chain and marketing. A lot of it is market driven, looking at what the consumers want. And that's a huge part of our research, but also looking at improving grower lives here. So green is a big focus for our breeding program at the moment. So we've had Hayward for a number of years. And to bring in a new green that can work well in warmer climes, but also have a larger production, is going to be key for that green category future. You would have seen the red. We commercialised that last year. That's been a long time in the making, so probably about 20 years. We had a little blip with PSA, and that wiped out a lot of our red kiwifruit breeding genes. So we've come along with Red 19 now, and that's probably the first start of the red. We're looking to step into a better one in the future, but at this stage that is a pretty exciting product for us, and it'll be servicing Asia. Got one last slide after this. It's a video just showing a little glimpse in our marketing spiel. So this is from Asia. It's a bit different to what you'll probably see in New Zealand ads, but this is an award-winning ad in Japan in particular.
Zespriのキウイは揚げ揚げデリシャス揚げリシャス
So a little bit different. Any questions?
Is this on? Yeah. I'll start off with a question. I've heard from past growers that Zespri, back in the 80s when we were growing it here, felt that Zespri was a little bit East Coast centric. What kind of support do you give growers in other regions or new regions?
Yeah, good question. So Zespri has a multifaceted team. So they've got the growing side of things, which is called the GET team. So that team goes around to the regions and provides support to the likes of Northland, Gisborne, and holds workshops and the like. As we're becoming bigger, we're becoming a more web-based company as well. So technology is key for our gathering into the regions as well. And that's available to all kiwifruit growers. Part of my team, we get alongside all new kiwifruit growers. We hold seminars that let you get a deeper understanding of Zespri as a company, because as I said, it's wide-ranging from packaging to innovation to marketing. We find it's important that our growers understand what their marketing body does, so that's the goal of that process.
Any other questions from anyone in the room?
The slide with the trade dollars per hectare for the organic, was that just green, or was that green and gold organic? So $63,000 a hectare?
Yeah, so that's for organic green. Organic gold previously was in the gold pool, and then it got a $2 premium above gold. So this year it's come out on its own because there's a bit more volume in that space. So you'll see with organic gold there is a slight increase in the premium paid for it. At the moment it's sitting $2.20 above conventional gold. So you're looking at so about high 13s, early $14 per tray.
Any other questions? Arun?
What kind of job generation would you envisage this would create on a seasonal and all-round, year-round basis, say for today?
So there's huge job opportunities for kiwifruit. You probably would have seen in the paper last week there was a job shortage for kiwifruit declared in the Bay of Plenty, and that's a lot of on-orchard work. So it's year-round now. In the past, probably with Hort 16A and Hayward, there would have been a down period, but now with the advent of Red, Sun Gold and then Hayward, the work is quite continuous. So there's plenty of opportunities within our industry, not just on the orchard, but in pack houses and then within Zespri as well. So huge scope.
Is the market seasonal?
So the market is seasonal, but that's why we bring in the 12-month supply window. So a lot of kiwifruit is going out of China. So they're the biggest producer of kiwifruit, with Italy being the second. And that's why we want to get into that 12-month supply to keep our brand on the market, because the Northern Hemisphere kiwifruit comes in then and it takes our shelf space.
All right, we'll leave it there from Zespri. They'll be back a little later to ask or answer more questions. So thank you to Sue and Tom.
Perfect. All right.
All right. Next, so we've heard about the global demand and what opportunity there is in the market. Next, we want to hear about how do landowners go about actually pursuing kiwifruit. And to talk about that, we've got three gents from Apata, Eugene, Jason and Shaun, and they're going to talk to us about how your kiwifruit would get from Taranaki to the pack house. Do we need a pack house here? And all the different ways that people can invest in kiwifruit in the region.
Good afternoon, ladies and gentlemen. So my name's Shaun, and I am here representing Apata from a post-harvest, growing and post-harvest point of view. So what do you mean by post-harvest? So that's the picking, packing and cool storing of kiwifruit. So who are we? That's who we are. I've come with two other of my colleagues. There was a comment before about bringing accountants with you. I can't go anywhere without a couple of accountants, so they're sitting over there. I'm not one of them. So we, as it says up there, we grow kiwifruit, we pack kiwifruit, and we cool store kiwifruit. We also do the same with avocados, and to a less extent, we're also in the post-harvest scene in blueberries in the Bay of Plenty. We're the largest packer of organic kiwifruit and the largest packer of avocados also. We've got 270 hectares of kiwifruit under our management, and that can be anything between us controlling the vine work right through to just completely from sort of paddock to plate. And we've got 230 hectares of kiwifruit under development at the moment across the country. And these areas, obviously, they're both rapidly growing at this stage. We're not a cooperative, but we're predominantly grower-owned, and we have just over 250 shareholders. Apata was formed in 1983 by 4 families, and we've grown to what we are today, employing north of 150 employees. Services we offer, so we've got, as I said, on orchard services, and that's sort of a bit of a list of what we do post-harvest, and some of we just thought we'd highlight some of the challenges that we see when we operate outside the Bay of Plenty region. We obviously draw a lot of fruit already from the Wanganui catchment, and those are some of the issues that we're facing and trying to work through. So why green kiwifruit? We know it grows successfully just down the road in Wanganui, and it grows very well. Obviously Taranaki here has grown it before, and we believe it can do again. We talked about no licensing costs with green kiwifruit. Zespri, we talked about the supply chain a little bit earlier, about the supply with cutovers from gold to green, that there is a sweet spot that Zespri would like in volume, and we believe there's a window there to fill it with some more green hectares. Other varieties, obviously Sun Gold or G3 was talked about. It's also a runaway success, but want to talk a little bit about whether that's quite suited for this area. It's obviously got its own challenges here from climatic conditions, and I guess wind around here can be testing at times. Red, which is the one we talked about there, it's very new. So all I'd say about red is that it's got a very short shelf life, and travelling from Taranaki through to the Bay of Plenty for packing could present a challenge. And also, Tom talked about obviously any new cultivars that might come along in that green space. Obviously land suitability, so just want to flag that not all climates are suited for kiwifruit. We're obviously after specific sets in soil around free draining soils, volcanic ashes, and think about your altitude above sea level as well. So that's all detail to think about. It'll definitely require shelter. Wind and kiwifruit don't mix. And water supply is critical, and a decent amount of water too, good quality water. I've just sort of given a highlight there of what the ideal process would be when you want to enter into kiwifruit from what year 0 might look like through to year 6 there. And some of these, they'll say it's ideal, but some blocks already may have a lot of shelter, so we can condense these years down a little bit, and there's ways to manipulate the growing of kiwifruit. So, but this is just to give you a bit of a flavour on the timeline that's required to get into kiwifruit. As I said, as I came up, I'm not a finance expert, so I'll hand over now to Jason, who will come up and have a bit of a talk about that. But I'll stay up here, Jason, if that's all right, because there's a little bit more at the end.
Good afternoon, all. My name's Jason Gibbs. I'm the commercial manager at Apata. As Shaun says, a former accountant. So I'm talking about the numbers. How much does it cost to get into kiwifruit? I suppose is one of the questions that we want to answer. This is assuming that you've already got the land. So the on-orchard development costs are around $130,000 to $150,000 per hectare. Now that could be a little bit more, could be a little bit less, depending on the infrastructure that you've already got in relation to drainage, in relation to irrigation, in relation to water bore. If you need to bore for water, then those costs could be a little bit more. As the previous slide that Shaun showed, there is a lead time into growing kiwifruit, and once you've grown it as well, you've then got to wait for the returns to come back from that crop as well. So there is a working capital requirement of around about $70,000 a hectare as well. Now we're looking at those costs and going, holy crap, that's a little bit high. But of course, the return comes with the cost. And if you look at the numbers that Sue showed earlier, around $67,000 a hectare for green, you take off the growing costs of around 40 and a bit. We estimate that on average you get around $24,000 a hectare back. So on a $200,000 investment, it's around 12%. So it's all about how much you put into how much you get out. We were discussing gold as well earlier, And those OGRs are quite staggering for gold. But when you put in the license cost and additional costs on orchard for infrastructure around additional shelter, hail netting, that sort of stuff that you do need for gold, then you're still coming back to that sort of 8 to 14% return. It's just the more money it costs, requires a bigger return for that. So we see green as quite an economic variety, and especially as we're seeing green volumes come down, the green pricing being a little bit more commodity based, we can expect that the supply and demand on that suggests that, it can push through the $70,000 a hectare mark and keep going. So if you're looking at, say, a 10-year development, over time, including any capital gain that you may get, we're kind of looking around that 12 to 13% mark as a return on investment. That graph there just shows you your cash flows over a 10-year period. So clearly the first 3 or 4 years, you're investing into your land, and then after that, you're getting the return coming through. From an ownership perspective, as a landowner, do I have to do it all myself? No, you don't. There's certainly that option that the landowner develops the whole orchard themselves. Clearly, you want to partner yourselves with people who know what they're doing, and that goes with everybody who's talking here to assist with that. And we're standing here as Apata, but we're also standing here representing post-harvest and orchard management. So if it's not us, it may be one of our competitors out there who can assist you in this. Other ownership models, and we've done a couple around the Whanganui region recently, is the owner may just vend in the land and join in with a couple of external investors to provide that capital in there. They may vend in the land plus a little bit more of the investment money as well. It just depends how much control that landowner wants to keep, and what's affordable as well from a funding perspective. A couple of notes here of what Apata are doing at the moment. We have in the South Taranaki, which is really the South Taranaki, right down in Waitotra, we've got a 21 canopy hectare development which is currently underway. We syndicated that last year and through this year, and are now into developing that orchard from an infrastructure perspective. The water bores going in, irrigation, and there's no drainage, is there? Yep, irrigation's going in soon, and we'll be planting before the end of this year, so that's well underway. We're currently looking to employ an orchard manager in that region just to cover the amount of expansion that we are doing in that area, and we're assessing new land for the next stages of development. But I think it's a key point, and I note the graph that I think Kevin showed, the country graph that Kevin showed earlier, is we do need scale within a region to make that work. If we've got 4 hectares here and another 4 hectares 50 minutes down the road and another 4 hectares another 50 minutes down the road, it's not economic from our perspective, and that just drives the costs up for the orchard owner as well. So, from a good economic perspective, we want an accumulation of hectares within a 30-minute region so that those economies can be reached. Elsewhere in the Whanganui, we've currently got 20 hectares picked and packed, and we're looking at a further 36 canopy hectares which are under development and likely to be planted late 2021. So a bit of development going on there. And what are our future plans? Look, we really are, as Apata, looking at South Taranaki and Whanganui at the moment, and that's going to consume Shaun's team for probably the next 2 to 3 years. So beyond that, we would have the capacity to move into different regions. Having said that, when you look at Shaun's timeline previously, there is a couple of years' worth of prep work that needs to be done before you can grow kiwifruit well. So, kicking off now is not a bad time to do that. Some of the questions that were posed to us as a brief on this presentation. One, I think I answered a little bit earlier. How much or how little do I need to be involved? As a dairy farmer, do you really know how to grow kiwifruit? The answer is as little or as much as you want. We provide orchard management services from simply advice on orchard to orchard growers, right through to full orchard management. You hand over the property to us and we manage it. And again, it doesn't have to be us, it could be another orchard manager supplier. So you don't have to know everything about growing kiwifruit from day one. There is the support there. And you really want to partner up with people in the first instance so that you get that knowledge base. Another question there, what happens once my fruit leaves the orchard? Well, effectively, it's picked, transported to the pack house, packed into boxes, cool stored, put on a ship and shipped off. Sounds really easy, but there's a hell of a lot of hard work that goes on right across the value chain to make sure that happens efficiently and effectively. But in essence, that's the case. Now, another question is asked, well, do we need a pack house here in Taranaki to make this work? The absolute answer there is no. The Bay of Plenty pack houses have capacity, and especially capacity for green, because that runs along the shoulder sizes of where the current gold peak is. So from an economic perspective, it's a hell of a lot cheaper to transport your fruit across the country to Bay of Plenty than build a pack house in Taranaki. The cost of transport from a region, say like Whanganui, is probably about $4,500 a hectare. Locally in the Bay of Plenty, it's about $1,200 a hectare. So you're around about $3,000 a hectare different. But I guarantee if we were to build a pack house in Whanganui or Taranaki, that would probably cost, in addition to a hell of a lot more than $3,000 a hectare. You're probably looking at $40 to $50 million for a pack house facility, and that cost has to be then distributed over what is currently a very small number of hectares. So from an economic perspective, it is absolutely more efficient to send it up to Bay of Plenty for packing. Some of the concerns that were given in our brief as well, I'm not going to run through all of these, you can have a quick read of those, but basically what we're saying is most of the previous concerns around growing in this region have been superseded over time by better growing methodologies, better infrastructure and the likes. From an expertise perspective, we've covered the point that you really want to partner up with someone who knows what they're doing. Again, if it's not Apata, it's someone else, but get someone who knows what they're doing, who's done this before. The lack of support services, it's not a problem, it can be brought in. But anybody's going to tell you to bring that expertise into the region, we really do need a reasonable scale of 50 to 60 hectares in a region in order to be able to make that work. So that graph, again, that map that we saw earlier had good scattering north of Egmont, Taranaki, and a scattering south of. We would consider that two separate regions. So we'd need 60 plus hectares in each region to make it work. And that's probably the biggest hurdle that we need to get through from an infrastructure perspective, is to get that scale within a particular area. But most of those growing condition areas there that are covered, really the improved infrastructure, the improved shelter, frost protection, hail cover, a lot of that has improved markedly over the last 20, 30 years to the stage where, we think Taranaki would be fine to grow kiwifruit in its current climate, as long as the land is suitable. Infrastructure, we've covered that, geographic isolation and the likes. Look, as I've said, transport to the Bay of Plenty is economic. It's absolutely not a concern. Landowner related, again, the cost of infrastructure, history and that. You do need a site-by-site feasibility. As Shaun said, not all land is created equal, and that's where Tim and his teams can help from a feasibility perspective to make sure that kiwifruit is capable of being grown on the land that we are choosing. And a note right there at the bottom there around the sales and marketing. I'll give Zespri one thing: they are very good at what they do. They've done a hell of a good job of marketing kiwifruit worldwide. I'll give them more than one thing, but that's key. Questions from the growing and post-harvest side?
We you see returns, I suppose, for Taranaki itself. So we've got some numbers probably on Wanganui. It's probably been our closest region and West Coast region. And there's obviously a massive variance between even there and Bay of Plenty and such. Where do you see we come into that from an OGR perspective?
Absolutely. I like to talk from an OGR per hectare perspective because the per tray return is a marketing return, but when you're on orchard, you really want to know what you're returning per hectare of land that you have. So I'll talk OGRs per hectare. And that's a relationship between both yield and return. From a green perspective, the yields in Whanganui are probably somewhere around between 8 to 12,000 a hectare, probably averaging just under 10, which is slightly below the average in the Bay of Plenty. But there's a real dichotomy in Whanganui. You have the 12,000 trays plus, and then you have the sort of 6,000 and 7,000 trays a hectare. So it really does depend on what land you're on and how you set it up. You set up a really good orchard, you're going to get those returns. We don't see any difference in Taranaki. It really is land selection, which comes down to soil type mainly, doesn't it? Yeah. So we would expect 65 plus. Don't video that. But if you get it right.
I'm growing 4 hectares of green organic in the King Country. We're right on the boundary of Taranaki. And I'm sitting on 65.
There you go.
Yeah. Cool. And that's an old orchard.
So you were the dot on the screen, wasn't it?
Yeah, with the dot.
Yeah.
So it's very doable. And I'm not high tech. Do quite a bit myself, but not, around that 10,000. It's organic though, so that helps it. The cream on top.
Yeah, just a point with organic is that it does get those higher dollar per tray returns, but quite often just has a slightly less yield, and does tend to come out very similar to conventional. Some years you win, some years you lose, depending on the climatic conditions. But organic is absolutely an opportunity and an option.
All right. Thank you very much, Apata. We'll keep moving so we can stick to time. All right. The next person we'd like to invite up to have a bit of a chat is Colin Bond. Money makes the world go round, and Colin's our banker who's going to help us understand, how people can enter into a kiwifruit operation. Thanks, Colin.
Thanks, Kevin. I'll do my best not to suck all the energy out of the room in the next 15 minutes. So here we go. So as said, my name's Colin Bond. I'm the Regional Manager for ANZ for the Bay of Plenty. I've got a team of about 70 staff, and about a dozen of those are focused on kiwifruit. So my objective today was just to give you an insight into the conversations we're having about kiwifruit, our view on kiwifruit as a bank, and perhaps a bit of an insight into how we would approach assessing a transaction as well. I'll start with a disclaimer, given this is a bank presentation. Don't take this as advice, and don't take this as a credit approval either, please. Okay. I'll also say the photo there, which I hope is behind me, is taken outside my lounge window. So that is my kiwifruit orchard. I own 0.89 hectares, so I'm a rounding error in the industry, and that's of G3. Okay. My wife does all the mowing underneath the orchard, and other than that, Apata and associates of Apata do all of the work on orchard. I just have opinions that they don't listen to very much. Similar to most growers, probably working with Jason. So, why kiwifruit? The conversations we're having with our existing client base, so mainly dairy farmers in the Eastern Bay of Plenty, has been about diversification of their assets. It's about potentially increasing profitability per hectare. It's about maybe adding some capital value to the land as well. For some people, it's just a new interest or a new challenge. And there is a bit of FOMO in here, I think, too. Fear of missing out, definitely. But the numbers that you've heard earlier, particularly on G3, quite rightly should make people interested and assess whether or not we can be part of the action as well. The options to invest was covered briefly by Apata, but definitely we're seeing it all. We're seeing people who want to develop their own land. We're seeing people who want to buy an established orchard if their land isn't suitable. We're definitely seeing pooled resources as well, so people can get together and get some of that scale that Jason was talking about, and passive investors too. Lots of clients asking about syndications, and we as a bank wouldn't make recommendations on that, but we provide facilities to allow syndicates to operate. So where does our conversation start with clients? It starts with individual balance sheet. That's the first thing. So whenever you deal with a bank and you ask them something, they'll say, send me some financials and I'll think about it. Same thing here. We want to understand people's capacity to take on more debt. And the reason for that, if you go into kiwifruit and it goes well, you need to pay us back. If you go into kiwifruit and it doesn't go well, you need to pay us back, unfortunately. Right? You can't have your lunch and eat it too. So we have a look at people's starting point, and then the next thing is all about due diligence and everything that you've heard already today. We want people to consider all of these things, okay? I won't run through all of them, other than maybe just the last piece at the end. This industry is very good at talking about averages, but the reality is there are winners and losers. And to me, it comes down to two things. It comes down to location. It doesn't matter how good a grower you are or how much expertise you put around you if you're in the wrong spot. And it also doesn't matter if you're in the right spot and you've got no skill set. So it's location and expertise, I think. So what does the bank look for when we're assessing transactions? The same thing that we look at for any type of land is about character or people, the people element. It is capacity or cash flow, the ability to pay us back, and it's about collateral. So if it doesn't all go to plan, how does the bank get their money back? So if we just look at each of those three factors, the character piece, let's take a classic case, perhaps in Taranaki, of a very capable dairy farmer. Then those people have demonstrated over their time with the banks really good decision making and really good governance. They have done hopefully their due diligence on the transaction. The environmental and social piece is interesting. We want to make sure people have got a really good track record in that space. More and more now, that's important and one of our key criteria. And if they haven't got the experience in the space, we want to make sure that they're surrounding themselves with really good people. So it's not a no, it's a recognition of a skill gap and then figuring out how do we plug that gap with expertise. So that's a character piece. Then we'll look at the cash flow or capacity piece. All of these things shouldn't be a surprise to you. We'll look at the sustainability of production, your ability to repay debt, the cost structure, how much you need yourself to live from as well. And in the bottom there, we'll stress test the budget though. And I'll show you a budget shortly that would be a typical one. For a G3 orchard, we might have a bit of a chat about how a green one might look too. So that's capacity. And then the last piece, if it doesn't go to plan, it's collateral. So just like any other lending, if we can, we'd take a charge over property. We would look at loan to valuation ratios. Now, To give you an idea, on a typical dairy farm, we're probably lending up to 60 to 65%, but it depends on the cash flow actually that property can generate. It's similar in kiwifruit, particularly on a G3 orchard where the cash flow was stronger, we would probably get to 60 to 65%. But on a green orchard, the cash flow isn't there, we'd probably be down closer to 50%, I would say. A GSA is the old form of a debenture. We'd normally take that of a company, and then it does come down to whether there's any other security as well, and what's the value you're paying for it versus realisable value if things don't all go to plan. So here's an example of the way the bank would view the budget on an orchard. And I've used G3, but I might have a go at Stead and just talking through what a green one would look like. So on a green per hectare basis, the banks would look at, say, 10,000 trays a hectare in the Bay of Plenty. If we were looking at something in Taranaki or another area that's unproven, that's one of the things we'd probably do to sensitise. We'd say, well, let's say you can't do 10,000 trays a hectare, let's call it 9. And the $8.50 a tray, I think Zespri's long-term average is between 8 to 10. Is that right, Tom? So we use $8.50 for G3, but for green we use $5.50. So let's assume 10,000 trays a hectare and $5.50, then an OGR, orchard gate return, would be $55,000. Growing costs, I've said increasing. I think that's important because 50%-ish of your growing costs on orchards are driven by labour and labour costs. So as minimum wage goes up, then the labour cost is likely to go up on orchard as well. That 45 would be a managed orchard, yeah. I mean, again, it's a variation. I've seen people on orchard growing costs vary between, I'd say, 25 up to 60. Now, the 25 is probably because they're doing a lot of it themselves, and the 60 is probably because they're putting on a whole lot of extra expenditure in the hope of increasing their yield on orchard. So I would say, just getting back to the green, 55,000 OGR, 30,000 growing costs. Actually, let's call it 35. So your EBIT number, earnings before interest, would be 20,000. We would say, of that 20,000, we can leverage that 9 times, meaning for a green orchard, we might be able to provide $180,000 per hectare. So that's actually similar to what Jason was talking about in terms of your development cost on orchard. So if you own the land and your existing balance sheet is okay, then there is potential there for you to borrow from the bank a lot of the development cost. Okay. Again, this is not a credit approval, but in theory. So that was a bit of a quick snapshot. The only other slide I was going to talk about was where you can get more information. So ANZ's produced 2 insights papers about the kiwifruit sector. The most recent one was in 2019, and that's available online. If you Google ANZ Kiwifruit report, it will come up. Probably the only things that have changed really since 2009, the development costs are probably slightly higher than what they were in the paper, and the G3 licence price, obviously, we assumed in the paper it was $250,000, and most recently that's $400,000 a hectare. That was it. Short and sweet. Painless.
So far, so good.
Oh, right.
Any questions from the audience while you think of one? I'll fire one off at you. What's the bank's perspective on setting up a new sector in a new region and lending for those kinds of opportunities?
Yeah, I think it comes down to the 2 slides earlier. One is the client starting point around the size of their balance sheet. You know, you think about what a balance sheet is: assets on one side, liabilities and capital. The capital is there as a buffer. It's a war chest for a rainy day if things don't go to plan. So it's going to be easier for a bank to assess a transaction if there's plenty of money in that war chest. So that mix of existing debt and capital was really important. And then the second piece is due diligence. So we're going to be, the reasons why the transaction will be successful or not is the same for the bank as it is the client. So it's all about due diligence, it's about the right location, it's about getting the skill set around you and demonstrating to the bank that you've thought through all of the scenarios, really.
Any other questions?
Easy. Thank you.
All right, we've started with the macro with Zespri. We've gone to the farm orchard management. We've gone to the banks. Now we need to figure out the land. All our three speakers have previously said that land selection is important. So here to tell us a bit about that is Tim Barrett, our local from Farm Ventures.
Kia ora, everyone. Okay, so I'll introduce myself to you. I was born and grew up in Opunaki, dairy farming, and have been doing farm consultancy for 20 years and syndication of dairy farms since 2005 as well, okay, as well as some forestry. I'm doing my postgraduate diploma in horticulture now, focused on the kiwifruit, and my involvement in kiwifruit has been for 2 years now, with on-orchard interactions of the winter pruning, the harvesting, and orchard consulting. Like just last week, I was on 4 orchards in Bay of Plenty, as well as numerous property assessments of kiwifruit establishment here in Taranaki. Okay, there's been 5 recently done, and each individual property needs assessment, as has been previously discussed, for its suitability to kiwifruit in the relation to its microclimate, the soil suitability, and identify suitable sites on each land's area, because each farm is not all exactly the same. Okay, so you identify that. Classic basic one is under 200 metres above sea level. Okay, gives you a quick answer. Okay. In order to generate a detailed development budget, and the following is first required on each site. We visit and then assess the soils, the microclimate features, like I just said, and relevant to that development that's needed on the property. Preparation of a plan for the orchard development on the site in line with the landowner's objectives and the capital available for the development, as just discussed, as to whether it's affordable for yourselves or if you want to collectively develop it with additional investment from others, which can be made as a separate block of land to create. There's all different ways of doing it that can be discussed. A detailed development budget for the specific site, which includes the property development costs and labour requirements, annual pruning and thinning, vine and crop protection, education as well, which we're establishing here in Taranaki. We've got that also. Education, fertiliser, the pollination, R&M, admin, and the harvesting with a 10-year plan for it too, okay? Doing a plan, laying out the steps necessary to successfully develop the site and take you through all that. All this is initially done with myself with Farm Ventures, and secondly with an independent peer review, like Apata and another, of the development plan using these two interactive companies already heavily involved in the orchard developments and consultancy around the country. After this, in regards to action, there will be, of course, all the project management, supervision, training, and operational management. And this is where you having these. It's great for us now having Apata already doing 21 hectares in our region, because we get to watch some of the best operations, okay, with the examples and being available, okay. And quickly for you to know too, one of the main area down there in Wanganui, the Andrew Coopers, the average for Zespri was 10,000 trays. Just last year they just did 12,000 trays per hectare in their yield, okay. And that's again the difference with, like any business, the key operator makes a huge difference, doesn't it? So the focus is long-term mindset to optimise securing diversified returns for us here in Taranaki. We have an education service, like I just said, it's getting established. The example of comparative employment for you is about 4 people per 4 hectares versus 2 for 80 hectares on a dairy, okay, for the difference with education, for requirements there. The payments from Zespri are also made monthly, like a dairy farm, but typically it's mostly May through, or April through to December, most of it, okay? After 30 years of time, the industry, like all industries, has made a lot of improvements in operational performance, better resilient orchard infrastructure and the development of Zespri, and providing a very strong market-managed team So we haven't got everybody like in the 80s competing with each other for the competition. So someone wants to sell it for $5 and talk to them, and somebody else says $4.50. Yeah, keep dropping it in the competition. It's all going through Zespri now. It's great. They have completed a general assessment of our Taranaki region's comparative climate, okay, with Bay of Plenty and Taranaki, all right, and the soil and for the kiwifruit that's available to you here from further study, okay. We're through Venture Taranaki, we can, if you request it, we can pass it on to you, okay, so you can read it and study it further, okay. The reason why I've researched this kiwifruit opportunity for Taranaki is from the reduced interest in further dairy and for diversified income and employment for our region. Okay, so this is not interfering with the industry, the dairy industry. This is actually adding value to each farmer and each investor opportunity here. We can get going with further development now, and it's exciting to have one of the best industry operators teaming up with such good proven operational examples. Example difference, well, most of the budgets, as some know that are here, I've done quite conservatively for us and added the sensitivity analysis as well, so we can see all the differences. So like that operating profit per hectare for dairy is commonly around $2,000 per hectare, okay? That's with Dairy NZ's research on all the history, okay? That with Dairy Base. And so that's around 15,000 to the 22,000 per hectare on the kiwifruit, okay? Gives you a relative idea. All right?
All right. Thank you, Tim. Any questions for Tim about site selection or, yes, over the back?
Tim, water is required for dairying. What sort of water requirements are there for kiwifruit? And how do we,
Yeah, good. Yeah, I've just recently discussed that with Taranaki Regional Council, and it's the same sort of things as us taking water out for dairy. It's the same sort of regulations, okay? And it's typical for you to understand irrigating an orchard. It's not sprayed around, it's just that you have the alkathene along the lines in the canopy, and it's just actually a drip, 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 like that, okay? Yeah, so it's with Taranaki, well actually, to make it quick there too for you, with that assessment we've done with looking at the differences with the regions, the main difference now with infrastructure and shelter, the main difference of any risk really is October wetness here. Okay, so there's a little bit more artificial pollination, which if you have a look at that country calendar thing, you can still get it online on TV. It was about, 3 weeks ago? Yeah, that explains all that too further. Okay. Yeah, it's off the top of my head.
so litres per hectare for both activities?
So for a 20 hectare development, you'll need somewhere around 14 litres per second, which will give you about 4.5 mils rain equivalent in an 18-hour irrigation cycle. So we work off litres per second. So if you bring that back to a hectare, somewhere between 700 mils to a litre per second. That's for irrigation, summer irrigation, not for frost irrigation or anything. That's just to water plants. So answer the question.
Yep. The council doesn't seem to have any constrictions on this.
Any other questions to
Tim, yeah, just what more information you got on winter chilling for the kiwifruit down our way?
Yes.
As we believe, some of our winters are getting warmer now.
Well, long term for the whole of the North Island, yeah, if climate change does happen, then it's supposed to be getting a little bit warmer all the way through. But our rates below the 7 degrees is good. You know, it is. Well, you'll see that in that assessment. We've already given it to you, Barry. Yes. Yeah. No. It's now there is sufficient cold winter for the vines. Yes, there is. Yeah.
Cool. Tim Barrett. Yes. One last question here.
We haven't heard about disease.
Okay.
So what about the Lantania scale, the leaf vine hopper?
We might pause that question because it sounds like a good one for Apata, Zespri, everyone to comment on, and we'll do that once our main speakers are finished. But save that question, we'll definitely get to it.
Yeah, biosecurity is an important thing, of course, yeah, more regions is more options. Yep, all right.
All right, that report that Tim referred to, we're going to make available on our Venture Taranaki website, along with another local grower's story, an organic dairy kiwifruit farm who did it in combination with dairy down in South Taranaki. Really good story, paints the picture of a farmer that was able to diversify their income stream successfully for, I think it was up to 30 years. Great read, and I'll send a link out tomorrow to the people who choose to keep on being informed. Our last speaker today is Barry Jones. He's come across from Te Puke. He was originally a Taranaki lad, and he's going to just give us a bit of insight on what's it like switching from being a dairy farmer to being a kiwifruit farmer and what's involved there. Tell us your story from when you were a dairy farmer, and then what made you consider kiwifruit, and how did that transition occur for you?
Still am a dairy farmer. Got to keep the cows going. I was brought up in Okoki, actually, out past Uranui there, in the hard country, and we had the chance to go up to Bay of Plenty way back in 77, and a friend up there had bought a runoff and he wanted us to lease it. It was my dad and I. And so we went up there and we bought a little dairy farm and went straight in, set of the pant stuff, and planted, I think it was 3.6 hectares of green. First year we put the shelter in and knew nothing about it at all, and there wasn't the infrastructure that there is now. It was a Dad and I were just talking about it the other day. Dad's 93, by the way, now, and he's getting, but we were just talking about it the other day, and he said, man, we must have been nuts or something, I don't know. But in hindsight, we wish we had have actually flagged the cows and just gone straight in and bought orchards and just got on with it, because there was so much, even then you could learn, okay, you know. But since then we sold that property, and 20 years ago we bought another property, had a green orchard on it, but we then spread out and bought a orchard. Didn't have anything, it was not in anything, so we put that into Hort 16 and then went through PSA, cut it all off, started again. That was pretty traumatic, but we got there. And then and that one was bought. We actually, this aside, kiwifruit is a great thing. If any of you here are dairy farmers and you've got family that are interested in land, wanting to do something on the land, kiwifruit is a great way of increasing your income considerably and getting your family involved. We've got 3 kids, and we've formed a company that's all our children are shareholders in, and we have purchased the one gold orchard about 12 years ago, and the one went through PSA, and then 3 years ago, 3.5 years, about March, we actually purchased the balance of the original farm we went to back again. I wish we could have got it at the same price we got it in 77, but it cost us considerably more. And we've since, we're in the throes of developing 9 hectares on there, and it's big. We've got first crop last year off 4 hectares. We'll have crop off all of it this year, so it's away. So potentially, it's the income from it compared with the cows. My son and I, one son is just share milks for us, and he said to me a couple of days ago, he says, I'm starting to wonder why we're doing it, the cows, I mean, compared with the kiwifruit, what the potential is, for, especially for the gold. I've sort of listened to you and talking about green. I've got a green orchard as well. I've left it green because it's we bought it 20 years ago, and it's just ticking over quite happily, and it's just over 5 hectares. It does 400 plus a year gross, and gives us about, I don't know, 250,000 surplus net. But the gold just leaves it for dead. We've got 4.5 hectares where I'm living at the moment, and that, I don't know, I can't get people's put figures out there, but that's did 213,000 a hectare last year, and so it's compared with anything else that's out there. And so you, it was, yeah.
What's the life of a kiwifruit farmer compared to a dairy farmer like?
I don't know.
Do you run the orchard yourself?
No, we actually have had a manager on, and this is another thing, don't do it yourself. If you don't know much about it, get experts in to do it. We've just taken on this year, actually we've had a guy doing it for a number of years that some of these guys down here probably know, I won't name, and he decided to retire, and he was doing a great job. So we've just taken on a younger fella in his 30s. The previous guy said, the young fellas are no better than what I do. And he's just absolutely switched on, and he's doing 200 hectares, and he's brilliant, you know.
What about getting the structures set up for the new ventures?
Yeah, we had a great guy do that as well. It's just getting the right people, and they're out there. And nothing against Apata, but my grandfather told me many years ago, never get into bed with a stock and station agency. and I figure the same thing with pack houses.
Okay.
Do it yourself.
Independent.
Yep. That's just me, don't worry.
Are there any questions from the audience you'd like to throw Barry's way?
If you're going to do it, any dairy farmers, if you've got a fair sort of an equity in it, get into it. And don't take any notice of these guys. If you can do it, do gold. Pay the 400, whatever. Last year we did 5 hectares at 286,000, I think it was. And then you look at it now and you go, that wasn't so bad. And if you can do the gold, get into it, because the returns are, even with paying for the licence, are way better.
You're painting a pretty rosy picture, and obviously the farmers of Taranaki wouldn't have got out of kiwifruit if it was always this good. Is it always good as a kiwifruit farmer?
Oh, no. No, I went through Rogernomics, didn't we, way back in the 80s. That was pretty hard when we were paying 26% interest. And Sue down here made mention of before Zespri, when we had 6 or 7 exporters, it was a shambles. And stick with Zespri, guys, if you're going to do it.
Good. All right.
No, it wasn't always back in the 90s it fell over the green, but it didn't have the gold back then, of course. So, and then PSA, that was a major hit, but fortunately we'd hung on to the money we had from the previous crop, and we managed to get through without having to cap in hand to our bank, so we got through. Yeah.
Beautiful. Thank you very much. Round of applause for Barry for joining us.
And anybody wants some names of people to contact for anything, I've got something to do afterwards.
I'll get everyone to come up, all the speakers to come up and grab a seat on the stage. So we've got a couple of minutes left before we close out the event for today. Also wanted to thank Taranaki Power Lines, Power Tools. Sorry, Sam. They've got a kiwifruit tractor out the front that you can have a look at as you walk past. So that'll be something to have a look at. You know, we can bring the infrastructure we need to the region as quickly as we can build it. I don't know who the best person to answer this first question is, but can we go back to the question from the front here about biosecurity?
Yes, thank you. So we've heard about the upside. What about the downside? The Antonia scale, the leaf vine popper, Taranaki climate conditions compared to elsewhere, soil conditions. How do we handle all that?
So I'll talk from the market point of view, then might hand over to Shaun just for the on orchard. So Latina scale, that is an issue for the industry. So at the moment, China have gone out requesting that Latina scale be checked before we export the crop. We haven't had that in the past. So we're currently waiting from Beijing for an understanding on that. What it will require is monitoring from growers and practices to put in place to reduce the numbers of Latina scale on their fruit. So it's manageable, but it requires close management. So from market access point of view, pests are something that needs to be taken into account. There are grower practices that you can put in place to prevent them or reduce them to a level that you can manage it and get into the market, sorry. So it is something to take into account.
And the lead vine hopper?
Can we have the questions on the microphone? Because we can't hear you back here.
Second question was the leaf vine hopper.
So there's lots of pests and diseases in the kiwifruit industry, and you name a couple of them. So there's lots of monitoring we do on orchard. So we've got thresholds that we monitor, and that's just people going out and looking for these pests. And then there's tools in the toolbox, both organic and non-organic tools that we can use to control these little critters on the orchard. So there's other diseases offshore that we don't want to get here, and that's where we sort of talk about the biosecurity risks. And there's an offshoot of the kiwifruit industry called KVH, or Kiwifruit Vine Health, that look and monitor these things on a regular basis, and they're actually just in the process of putting a new pathways program together, which looks at all the inputs and that come in from out of the country into the country and then onto orchard. So there's a lot happening in that space, but yeah, I suppose I don't know if I can answer any more.
Yeah, that's a really good point, just on the overseas risks. So one you probably saw in the news not long ago was initially there's a vine disease called Moria, which is a vine death disease, and that's spreading throughout Italy. It could be related to their climate, because they are a lot hotter climate and the irrigation systems over there aren't as advanced here. So there are diseases out there. Another example would be brown marmorated stink bug, and that comes along at the port regularly through containers. We don't want that getting into the country. That has caused fruit to drop on the ground overseas from that pest. We don't know how it would operate here in New Zealand, but there could be significant effect on crops. That's why you're seeing, particularly in the Bay, a lot of people are covering the orchard completely with hailcloth, and then they're able to cover the whole orchard to keep that bug out potentially in the future. So that's something we're keeping on.
Question for you, Sue. 30 years ago, we grew kiwifruit here. What's changed in the last, not saying anything about ages, what's changed in the last 30 years that should give growers confidence that now is a different time to grow kiwifruit? And what's going to happen in the next 30 years that people should look forward to?
Well, some of the big changes are more like on-orchard structural changes. So I don't know, probably a few of the growers here probably used to grow in the T-bar method, where you grew it as long rows of bushes of kiwifruit. We've now gone into pergola growing, so we're getting higher yields, easier to get higher yields, and also high dry matter fruit. We're going into a world, into the future, of new varieties. So, we're hoping that we're going to have, and Tom talked about this, into the future, peelable kiwifruit, purple kiwifruit. We've got so many different things. We've got 100,000 seedlings in our program to try and find the next big thing. We've got an amazing kiwifruit that's actually a vitamin C bomb. So it's this kiwifruit that you take, and it's the vitamin C you get out of it is exponential. But the thing about it, it looks like a rat and it tastes terrible. But those are the kind of things we're trying to breed in our program at the moment. So, the future for the kiwifruit industry is looking really bright, especially with the reds. In the future, Zespri would love to have a little kiwi berry, something that convenience is a big thing. What we're getting past with customers at the moment, you obviously have to cut it, scoop it, eat it. So have something that they can eat the whole thing, pop in their mouth like a grape. The future that we've got within the kiwifruit industry is pretty amazing.
Thank you. Any other questions? Yes.
Hi. You've only briefly touched on pollination, and that was artificial. Nobody's talked about bees. And because I know that kiwifruit do need pollination, they're not just wind pollinated.
Is there a question or a comment?
Well, I'd like to find out a bit more. Being a beekeeper, but we're in Taranaki and not having, what are you expecting? Hundreds of people in the room all going to start doing kiwifruit, and you're going to need bees.
To add to that question, one of the myths that we had was that we've had pollination issues in the past. Last time Taranaki was growing kiwifruit. So can you perhaps give us a perspective on how that's different now?
Okay. I was probably only about this high when you had pollination issues in and kiwifruit here, but I can talk a little bit about pollination issues that we have in Waikato. So Waikato, be it only a skip and a jump across the hill from the Bay of Plenty, is definitely creates a few issues with orchards that are surrounded in dairy farms, especially when clover's flowering. Bees do disappear, they like clover. Kiwifruit flower is not actually attractive to a bee, but we talk about artificial pollination as well. So definitely we can't do it all by artificial pollination, and bees are required. They are a key part of growing a good shaped fruit. I can't remember the specific numbers. There were somewhere around about 8 or 9 hives per hectare for kiwifruit pollination, where a Hayward flower takes about 50 to 60 visits to pollinate, where a gold flower is only somewhere around about that 5 to 10. So it's quite a bit lower to pollinate a gold. But I can talk more specifically offline if you want, about kiwifruit pollination.
Probably time for one more. We might go to Mr. Jupp in front of you.
Just regarding the labour supply, what's the prospects of mechanised pruning and picking, and would you have to have a different infrastructure for the orchard to handle it?
So, yeah, that's a good question, because labour is a constraint within our industry and it's a risk going forward, especially with the borders closed. So there's a lot of work being done in the technology space in terms of pickers. You've probably seen some on the TV before picking kiwifruit. It's challenging because particularly with Hayward, and they can hide up in the canopy a lot higher, so you're going to miss some. But that is a work on progress, and technology advances such as mapping, heat mapping is another tool that potentially in the future will lower that labour requirement. You could be able to push growers to, or your workers to, areas that have got high bud numbers and thin them down rather than going throughout the whole block. So it's a huge focus for our innovation program, and as well as that we're looking at different structures for kiwifruit. So whether we can grow kiwifruit beyond pergolas and looking at high density plantings, things like that, just to see what's the next step forward for kiwifruit. We've gone from T-bar to pergola. What's next?
If I could just add to that, from a post-harvest point of view, where we bring obviously the kiwifruit into a building, and it goes through the same machine into a same shaped box. Automation in a post-harvest makes sense inside the building. So every person that we have out picking, we have about 2.5 inside a pack house packing kiwifruit. So for us, it would be automating the sheds first, and when those people turn up for the rolls, we'd be putting picking bags on them and sending them out to the orchards to pick. So that's one way of looking at it. The other thing with automation in an orchard is not every orchard's the same. So you've got some blocks that are 3.6 metres wide rows to 5 metre wide rows, and I don't know if you guys, I'm sure you've all got a Jack Russell at home that goes and chases a rabbit and digs a hole. That machine picking doesn't know that hole's there and ends up getting stuck in it all night trying to pick. So, there's issues on orchard, is what I'm trying to say, where in a post-harvest it's a lot easier.
Just following up on one thing that Shaun said there, in relation to labour on orchard, I think it was Colin. Someone said about 50% of your inputs on orchard are labour. It's key that any scaled area for kiwifruit is within, say, 30 to 35 minutes or something of a labour source, such as New Plymouth or Whanganui, because we are going to need to draw from local labour source at some stage on orchard. So that's one of the key due diligence requirements when looking at land suitability is location, and we do need to be near a labour source to be able to make that efficiently work.
Yeah, good. Another one too is that actually having multiple orchards in around within that half an hour's drive there, a key operator can actually run that 50 to 60 hectares, okay? One operator. Right? Well, another one too with the bees. It's a classic, really nice example out at just past Uranui there, an orchard on the avocado orchard there. That family there, they put solar-powered lights in the top of their orchard, and at night time attracted all the bees at night.
Fantastic. All right, just before we invite Justine back to close out the meeting, or question?
Yeah, I have a question.
Please.
How much scale in terms of hectares would we need in order for there to be economically justifiable a pack house here? Or
I'd go out on a limb and say it wouldn't matter how many hectares you had here. You won't find a post-harvest facility who's willing to invest in a packhouse facility here. Now that might sound rough, but it's pure economics. We're looking at, from green, we're looking at maybe a 4 to 6 week harvesting window. From gold, it's probably more like 3 to 4 weeks. And so your utilisation of assets is very, very limited. The reason why you've got pack houses in Bay of Plenty is you didn't have a choice. You had to pack it somewhere, right? So now when we're going to the regions such as Gisborne, Whanganui, we're looking at that and looking at the shape of the supply curve and saying if the peak of main pack gold is way up here and then it goes up and then drops off, we can actually fill those shoulder gaps with supply from the regions. So there's capacity in the Bay of Plenty to do that. Now, I won't say never, but we've never made it work from an economic perspective to say actually at 100 hectares or 200 hectares or 500 hectares or whatever it might be, it actually now makes sense to put a pack house in the regions because we've got that capacity in the Bay of Plenty that's currently unutilised. It may sound a bit rough, but that's just the economics of it.
I just want to support that view because it's, from a banker's perspective, I talk a bit about banking growers, but we also, of course, have to bank post-harvest operators. And we would have the same concerns about any existing operator getting the scale necessary to try and fund a pack house in Taranaki. That would be challenging, definitely.
Yeah, if you're thinking about it, if you've got plenty of equity or a fair bit of equity in your farm, just get into it and give it a go. That's my advice. There's plenty of expertise out there.
Thanks, Barry. On that endorsement, one more question.
Yeah, regarding the impact, say, overseas markets in regards to China and potential growth in regards to Kiwi setups there, Kiwifruit setups there, what's the chances?
So talking about growing over there? Yeah. So we're looking to expand our ZGS operations because at the moment the ZGS production coming out of these sites is not meeting the market demand by a long stretch. So Italy's got 3,000 hectares. Safe to say it's been hard going, getting up and running, especially with this new disease coming through. So we're looking to expand either through Italy or going to Greece and America as well. We're trying G3 over there. Hayward, because there's no licensing mechanism, we purchased that. So we can look at purchasing more green, but it's hard to get the Zespri quality, which is the key. And then you probably would have seen in the news around China with our G3 license material. So we're working through that now as an industry. It's some pretty tough decisions to be made. It's pretty unfortunate we've been put in this situation, but we need to work through as an industry what's the best solution for us going forward. Absolutely, yep.
All right, I think we'll call that a day there for now. All of these panellists will be in the next room having a cup of tea, so if you've got more questions and you want to ask them a question or two, please do come and ask them. As you leave, we would just like you to return your name tags, and there's 2 pots. One says, yep, keep me in the loop, and one says, no, I've heard enough. Just put your name tag in the correct bowl, and we'll either keep you in the loop or we'll let you know there's another opportunity. And we'd like to welcome Justine up to close the meeting.
I'd just like to thank all of our fantastic panellists. Thank you very much for your very open and frank conversation. It's been very, very helpful, I think. And also, obviously, a big thank you to all of you who've taken the time out to come and learn about this potential opportunity for Taranaki. As Kev said, if you're whether you're in the yes, I'm interested, or whether not right now, camp. In terms of the branching out project, we started with a giant list of the potential opportunities for Taranaki, what we call the long list. We've been gradually narrowing that down to the short list of kind of the 10 or 12 that are going to be explored in more detail, and obviously Kiwifruit is sort of the first one of those. But please, if Kiwifruit's not quite right for you, or if you want to do Kiwifruit and other stuff, then we'll be letting you know about what the other opportunities are as we carry on that exploration journey in conjunction in particular with all of those CRIs and a great collaboration there. So thank you to everyone, and I'll just close out our kōrero today with a karakia. Unihia, unihia, unihia ki te uru tapunui, kia wātia, kia māma, te tinana, te wairoa i te ara takutu. Ko ia rā e rongo, whakaere ake ki ronga, kia wātia, aira kua wātia, hou paimarere.